Anish from BlackBull Markets. Today's Friday the 11th of June 2021. We're coming into the European session today to end the week. Swings and roundabouts in the markets as usual. More importantly, that chart of gold analysis we discussed yesterday. When we touched on gold, prices were ticking around the 1888 mark, coming down to that support level that we mentioned, which was that previous area of consolidation right here from earlier on in June, around the 1873, 1865, wicked lower into this level, took out liquidity and an immediate reaction to the upside. Now trading back around that $1,900 an ounce mark. So really interesting to see gold react this way. Of course, CPI data came out at 5%. That's a 12-year high. Massive print, of course, priced into the market with a greater value of gold, and that gives an indication now that gold could move even higher. So if we're looking at gold, we do have potential again. If we go above 1915, you've got those wicks to the left here around the 1957 mark, and we could easily see that area get taken out next week. So keep your eyes on gold as one to look as, again, we identify those. You can see back on this daily chart, you again coming back into this channel here, and we're coming to the base of it. So we could see that buy the dip mentality come back into gold, and now seeking higher grounds to cross higher, get above 1920 and get some firm legs heading up to 1950, 1960, then that all elusive 2000 an ounce mark. Now, the purpose of this video though is not to analyze gold. Of course, we've seen a nice kick up today, and I wanted to talk about the Australian dollar against the Canadian dollar. Now, what's interesting about this pair, unlike the dollar CAD, the Loonie, is that the Aussie's more correlated, rather than the US dollar, to commodities. So with that kick up in gold, today we've seen a nice push, of course, in gold on the same session. So it's been an interesting session because the dollar CAD chart is pretty similar to this, but we haven't had that nice upward move. So if we look on the higher term time frames, why this is interesting is because we're at a key support level. If we just go down to the weekly chart, well, up to the weekly chart and start here around that 93.5 cent mark is where we see lots and lots of support. And this is also reflective on the Canadian dollar as a whole, where they've had that serious strengthening story. However, the Australian dollar has also been one to watch this year, which has gathered some pace around that 80 cent mark against the Aussie dollar. So this could be a nice turnaround story here. We could see a retracement back up to the 94 or 95 cent mark on the Aussie dollar. This is what we're looking at here. Is this support remaining strong? We've seen a rejection twice here, double bottom ever since August 2020. This is on a weekly time frame, and your moves on a daily time frame could well support that if we do get across above this barrier that we're currently facing at the moment, which lies just around that 94.30 cent mark. Excuse the line. Just around there. And then what we could see is a cross above here, bringing the Aussie CAD trade back into that territory that we saw back in April around the 95 cent mark. So this is one to watch. Now, it's interesting because the Aussie dollar is commodity linked, but so is the Canadian dollar. And that Canadian dollar's strength's really been driven recently with the Bank of Canada hinting at the tapering and in raising interest rates next year. And further to that, of course, that rally in WTI crude oil. Now, if we just bring up that chart of WTI, traded above $70 a barrel again for the first time in a couple of years. So if we go into monthly chart here, we can see the last time we were at $70 a barrel was in May 2018. And of course, economics have changed since then. We had that big pandemic contract that was unprecedented, of course, down in that negative territory, and regained grounds pretty fast back to pre-pandemic levels at $60. A lot of economists calling for $75 to $80 barrel on oil this year, and this could well come into fruition as economies start to bounce back. But of course, this is more of an inflation trade than anything, with all the stimulus that's being pumped into the market. Money is flying into commodity heavy prices, and what we're seeing is commodity inflated prices rather picking up, and that's reflected right across the industry. And as more economies get back into work, people start taking planes again, people start driving more again, we can see more demand for oil, and supply is limited, of course. So might need some supply changes if that gets out of hand, but on the monthly chart is where you're going to see your next target. Technically to the upside, we're looking at anywhere around that $76 mark to potentially be in view for the bulls. If you're looking to long this position, it's not a bad trade to hold. So discuss gold, discuss Australian dollar, Canadian dollar long opportunities, WTI crude, the potential for that to continue further to the upside, and how that's somewhat stalling with the Canadian dollar correlation and breaking down recently, which is presenting those long Aussie opportunities. So do stay tuned with the charts. Have a great weekend. Enjoy your Friday trades. Try to take profits, relax, and get ready for next week. All the best.